Bitcoin 14-day RSI as oversold as it's ever been, and basically after this it can fuck around a bit and then slingshots out. So expect, you can't digest a move like this instantly, but we're talking days, a week, 2 weeks maybe, before then the market takes off. Everybody is in extreme fear. You think the cycle's over, and all it's been doing is doing the same old shit, and it always does this. So these are all the corrections we've had since the start. We had a 20%, a 20%, a 20%, a 21%, a 33%, 31%, a 28%. And then we look at it back in the previous cycle, 31%, 9%, 21%, 14%. And the previous one to that was all 35, 40%. Then 50%. And it's like, guys, this is what you pay in volatility for the returns that you get.
Raoul begins with the core driver of the entire macro landscape, global liquidity. According to his models, total liquidity tends to lag by roughly 3 months. That means that today's market behavior reflects liquidity decisions made a quarter ago. And right now, these models suggest that liquidity is entering a rising phase. Why? Because governments and central banks have no alternative. Debt must be financed. Interest payment burdens are soaring. Balance sheet expansion becomes the path of least resistance. The U.S. Treasury general account is being drained. Quantitative tightening is nearing its end.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Total liquidity lags it, so by 3 months. So it's suggesting that liquidity should start rising, which makes sense because we know what we've got to do. We've got to pay the debt, and we know that the TGA is going to be drained, and the QT is going to finish, and the Chinese are increasing their balance sheet, and we got regulatory changes coming, and we got rate cuts coming, blah, 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 blah. And the ISM, the business cycle, follows that. So the next thing for the business cycle is to go higher. Business cycle going higher means we'll have money in our pockets. It goes into risk assets, and that increases the price of crypto. It's not that complicated, but nobody wants to believe it because you're looking at 5-minute charts and scratching your nuts, wondering what's going on. You can't do stuff like that. It doesn't work. And demanding that you get paid. You can make all the demands you want. The market doesn't give a shit. And once you learn that, it's much easier to deal with. So at the ISM, we're seeing that it's some of the surveys are starting to increase sharply as the tariff stuff happens and people start getting more comfortable. What we've seen is like Empire survey started going up. It can diverge, obviously, but I think we will see the ISM starting to come up. Bitcoin is already priced in the ISM really quite low at about 47. So Bitcoin's diverging from these surveys as well right now, because I think there's a liquidation going on in Bitcoin, because liquidity is starting to come back in. Crypto's trading like shit, like somebody got hosed in October the 10th and is unwinding something. That's what it feels like to me. And it feels like, and we'll come on to sentiment in a sec, panic lows. Okay, the dollar, big component of all of this. The dollar is what is the main part of financial conditions, which leads. The dollar is following the last Trump cycle almost perfectly. Now, the dollar's still going higher, I think, in the short term, but it should roll over and have another leg lower. Doesn't change the world if it doesn't. It just means that we have a pretty good read on when the end of the cycle is, because this leads by like 9 months. So as part of our financial conditions index, but our general thesis is liquidity comes back. They start changing a few things with like SLR, stuff like that. But generally speaking, as the liquidity comes back in, we should see the dollar have its final leg lower. So there's a few parallels. Again, remember, they're not going to be perfect. Don't expect it to pay out perfectly. Think of it as contextualization and understanding, where you put it against 20 other things to try and ascertain what you think is going to happen. So Bitcoin in 2024, basically repeating. Sorry, 25, repeating. Same correction. And you guys were losing your fucking shit back then as well. And guess what? It V-shaped out of it. But you don't remember that, do you? Because that would be too easy. Or whenever this correction was, July 24 to 25, same thing. Corrections are very similar. And we've got many of these charts of sort of similar style corrections. So I think we should continue that way. Bitcoin 14-day RSI, as oversold as it's ever been. And basically, after this, it can fuck around a bit and then slingshots out. So expect, you can't digest a move like this instantly, but we're talking, days, a week, 2 weeks maybe, before then the market takes off. It could also just come straight out of it like it did then. We have to wait and see. Weekly Bollinger Bands, that's the contraction in volatility. We got to these super low levels. Every time we got to these levels, we've shot out of the gate. 189%, 125, 107%. It works really well. And you've all forgotten that you were feeling the same in April last year. And I was pointing this exact thing out to you. Oh, we've already just had one of these. And that was the one the prior year that finished in September, where you were losing your minds. And you were losing your mind saying, why is it not working? Everything's broken. Nothing happened. Boom. The market shot up. I mean, it went from September at wherever it was, 50,000 to over 100,000. That's Bitcoin. And then it went from 75,000 to like 120,000 after the last one. So where are we now? 28% correction. Oh, guess what? They were both 28% corrections. Will it be exactly 28%? Will it be 30%, 32%? I don't know, and I don't care. Unless you think the cycle is over, in which you have to show me other data than, well, they told me the cycle finishes after 4 years, so it's over. That's not an argument. The other thing is, because you've all lost your shit, you're throwing poo at each other, the fear and greed index is absolutely shockingly low. We've had a whole series like 5 days or 4 days where it's been below 20, which is almost unheard of. It's like 2022 levels. So everybody is in extreme fear. You think the cycle's over, and all it's been doing is doing the same old shit. And it always does this. So these are all the corrections we've had since the start. We had a 20%, a 20%, a 20%, a 21%, a 33%, 31%, a 28%. And then we look at it back in the previous cycle. 31%, 9%, 21%, 14%. And the previous one to that was all 35, 40%. Then 50%. And it's like, guys, this is what you pay in volatility for the returns that you get. Look at the returns. 2,000%, 476%, 11,000%, 55,000. I know they're diminishing over time, but when you look at things like others, which is the more speculative end of the crypto market, i.e. everything below the top 10, the corrections are 60%, and it still powers ahead. So the further out the risk curve, the larger the corrections, and the larger the comeback is when it comes back. So, big picture, zoom out. This is total market cap of crypto minus Bitcoin. Looks all right to me. Total market crypto minus Bitcoin and ETH. Looks all right to me. Total market cap of crypto minus the top 10 tokens. This is the others. Looks fine to me. What evidence do you have that it's all over? That the 4-year cycle is Satoshi's gift to the world, so any dribbling moron can follow the cycle. It just doesn't work that way.
Gold is behaving exactly as financial conditions would predict. It tracks real-time liquidity expectations and tends to lead actual liquidity turning points by several months. Global liquidity hit new highs, plateaued briefly due to U.S. actions, but with China ramping liquidity and the dollar expected to soften, Raoul believes we're preparing for the next major leg higher. Gold is pricing liquidity out to 2026, aligning with the broader macro cycle Raoul expects. Charts comparing gold to liquidity, interest payments, and forward indexes all line up. Gold is simply doing what the models say it should do.
Gold has been following this like it knows. Yeah, because gold is real-time financial conditions right now. Financial conditions, the dollar, interest rates, and commodity prices. And gold is reflecting financial conditions, which is the forward look on liquidity. I'll come on to that in a sec. A bit confusing for you all, but gold is kind of explicable right now. Here's GMI global total liquidity versus gold. Gold says it should accelerate. Global total liquidity has been it got to new highs. It's flatlined a little bit because of what the US is doing. Meanwhile, China's increasing the use of its balance sheet, and the dollar's gone up a little bit. I think it probably rolls over at some point soon. We'll come on to that in a sec. And that then may lead to the final leg higher in gold and the final leg higher in markets. But you can see gold is basically pricing global liquidity impulse all the way to the end of 2026, which would be kind of what we're expecting for the cycle. Again, don't expect perfection. Raoul said, everything moves, deviates. You need to assess the probabilities, see the data as it comes in, and understand. But when I put gold versus I don't know why Julian's put everything in pink. I don't know. He's feeling flamboyant. But what we've got is that's interest payments. Gold is forward pricing it, and following up is liquidity, which lags gold by 12 months. So we've actually got the phasing of all of this, these dominoes. We talk about these dominoes all the time. And why it matters to us is because it explains 90% of crypto's moves over time. Now, again, this is the issue with the impatience and the people who don't understand this stuff is like, well, liquidity's moved, why hasn't Bitcoin moved? It's all broken, everything's shit. It's like, no, it doesn't work like that. There is a variability around this stuff. This is a weekly plot chart going back 11 years. Not 11 years, it actually goes back, 12 years now. And you get variability around the mean. That's how markets work. That's the 10% difference in correlation. So you expect differences, and the differences give you informational value. But what you get is this stunningly high correlation over time. And again, people don't really understand this. They're like, your charts are just correlation versus causation. They're bullshit. You're just inventing stuff. I'm like, no, and no. Okay. US government shutdown. This is where we got it wrong because it wasn't something we could know. And there's one bit we missed that we didn't really fully grok at the time. And that was the fact that once the reverse repo had been drained, which was a net stimulus, net liquidity boost, the rebuild of the Treasury General account, they build this bank account up and down. So it doesn't really matter. But when you've got no offset to it,
the macro cycle is functioning exactly as expected. Liquidity is bottoming and preparing to rise. Business activity is turning upward. The dollar is nearing a peak. Sentiment is washed out. Bitcoin is historically oversold. Market structure remains untouched. And global liquidity projects a powerful uptrend into 2025 and 2026. In other words, the panic you feel today is the same panic people felt during every previous mid-cycle correction. And every time, markets eventually responded with explosive upside once liquidity and sentiment aligned. The challenge is staying patient. The opportunity is seeing the big picture before everyone else does.